Let's shift focus now to the markets picture over in Kenya, where we had Kenyan shares rallying to a 28-month high on Friday, with foreign investors encouraged by the progress in the counting of the votes from last Monday's presidential election. We had the index, which is up almost 11% so far this year, having gained steadily since the Kenyans voted peacefully, and that despite the delayed results having led to challenges from the two front-runners camps, bringing back some of those painful memories of the disputed 2007 vote, which ignited weeks of violence. We had the benchmark NEC 20 share index rising 1.6% to close at just about 4,658 points by Friday's close, a level last touched on November the 8th, 2010. Just looking at a company that stole some attention, Mumia's Sugar. We had shares in the sugar grower and miller jumping 6.7% to 4 shillings 80 on Friday's session, and that managing to see some recovery come through after investors had offloaded the stock following a profit warning last week. Of course, as you can see there, on a 1-month basis, cumulatively, the share price has lost just over 3%. In the foreign exchange market, the shilling ended steady at about that 86.10, 86.30 level against the dollar, and that welcomed where trade in the shilling off an 18-week high of 85.10 hit shortly after voting passed off peacefully on Monday has been volatile as investors assess the implications of the delay. We've got the unit coming into this morning at 85 shillings 70. We have had the shilling 0.2% stronger against the dollar so far this year, and largely supported by the central bank's continued stance of mopping up liquidity, making it costly to hold long dollar positions. So that a broad look at the Kenyan markets picture. Let's get into some analysis of it now with Amos Odero, who's senior dealer at Genghis Capital. Amos, thanks so much for joining us this morning. Well, as we had the tallying process winding up and market anxiety seeming to have eased a little bit, the market managing to gain in Friday's session. As I said there, we had the index rising 1.6% by the close. What do you make of the kind of impact the entire election process and the results that have come to the fore so far having on market activity?
One thing I think we saw Kenyans actually exercise their right and also exercise their patience. I think the results took almost 5 days to come through, and there was a bit of patience there, and that actually strengthened the market. We actually saw a bit of demand coming in, particularly from foreign institutions, foreign players coming in to actually mop up some of the shares that were there in the market. That actually led to some of the gains that we saw last week. Index going up above the 4,600 mark last week, mainly driven by the insurance sector, the banking sector, the manufacturing sector. So we actually expect to see a lot of activity coming this week.
Comments have been that the election was holding the markets hostage. The market's likely to break out 30 to 35% growth if the election ends well. Is that a view you share? Are you as optimistic?
Yeah, we are optimistic. That's a view I share, that the market has actually been held hostile. There are people who are actually waiting to see where the cards fall before they can actually take an investment decision. And actually, we've actually seen the results are actually out. Apart from apart from Raila going to court to dispute some of this of the results, we're actually seeing a stable environment, a stable market. Last week was a bit of a slag, but actually we expect to see a lot of momentum coming this week with actually most of the players in the industry in terms of retail and also institutional players coming back into the market this week.
A lot of that momentum was provided by the insurance sector in the course of last week, as you alluded to, and a lot of it having to do with the expectations around what these companies are expected to come to the fore with as far as their earnings reports are concerned. Amos, so what's your outlook on that insurance front, and what's driving the optimism around that sector right now?
I think one of the two major counters that we saw moving was one was Britam, I think, which week on week actually ended up gaining about 20% week on week, up to highs of about 8 shillings and 50 cents, just 50 cents off the IPO price. And also we saw a bit of activity, particularly from CIC Insurance. I think most of the players are actually looking at the results that are expected from this sector. Particularly, we saw them actually diversify their business, not only from the insurance products, but you're actually seeing them actually go mostly into real estate projects, buying land, putting up commercial buildings, and that actually will actually translate to how much money we expect them to make this financial year. And so far, I think the way the sentiment in the market is and the demand that is coming in for these particular counters actually shows that we may actually see quite healthy books from the two companies this year.
When it comes to healthy books, it's Mumia Sugar that seems to be lacking in that regard. We had that company really coming under pressure in the course of last week as it came through with a profit warning, Amos. But the share price is seeing some turnaround in Friday's session with a jump of 6.7% coming through on that front. What do you make of the recovery? What do you make of that company right now?
Apart from the profit warning that they issued, that we may expect to see quite low results compared to the other financial year. Where the price was, and then we saw a lot of speculation coming in. The speculators actually came in to actually mop up some of the supply that was there. The company trading at levels of what, 4 shillings and 70 cents, 4 shillings and 80 cents. We actually saw most of the investors coming in who are actually speculating on this particular share price. And the company also came in and announced that they're actually looking at a more robust, more stronger second half of the year for them. I think most of the investments hadn't actually bore fruit. We're actually seeing the ethanol production, the water bottling, the sugar selling didn't actually bear much fruit the first half of the year, but they're actually talking of stronger performance and better terms coming in for the second half of the year. So we actually saw a lot of speculators actually take advantage of the dipping in the share price. I think from 7 shillings to lows of about 4 shillings and 50 cents, which actually looked quite attractive to some of these investors. So they're actually taking a position before we actually see any price movement. And as I said, this week and the coming week, we may see actually a robust movement in the market, with most of the players actually coming back to take positions after the elections. So it's actually quite a good pick for them.